Hi again, this is Rick with AmazingAccuracy.com, and today is March 27th, 2017. It's currently 8:01 p.m. Chicago time. Today we're going to take a look at the crude oil market because we have ourselves a buy setup in this market, and I'm going to show you why. Now you're looking at the daily market right here, this daily chart, and if you take a look right here, this red zone, this is what is called the oversold zone. Now prices have been in this oversold zone going back since the 9th of March, and is now at the bottom end of that oversold zone on the daily chart. But notice this dollar sign triangle right here. This represents a dollar sign F date, which means it's a higher probability turn date than a standard F date, which is one of these red diamonds you see here without the dollar sign. Now the last one you see here marked the turn down of crude oil here off resistance from one of the exponential moving averages that I have here. And now we see that coming off of support here, today being March 27th, is also marked as an important turn date in the crude oil market. Now I also want to draw your attention to these two indicators down here. I have the MACD and I have the DMS, also known as an ADX or an ADXR. And we can see that the MACD is about ready to cross back up again and go above the zero line here as far as the histogram is concerned. You'll start getting green bars to show here if this price bar high is exceeded in the next day or two. But the other thing too is that this DMS line here will start to turn down when prices start to turn up here. And this is where we have this convergence divergence signal, which is a high indication that we're likely to see prices no longer moving lower in this short-term bear trend that's been going on since January, so the beginning of the year. And so we're start seeing this market now making moves to the upside as opposed to continuing lower. Now we're going to take a look at the weekly chart and see how the two coincide with each other. Here we see that prices have been moving down from a weekly swing top since week ending February 24th, and this is indicated by the weekly turn date of this red diamond that you see here. But now we're in that area, time zone area here, where we have another weekly turn date due, which is shown right here. And although this week is not lower than last week, it's within one bar, so we can start looking for that weekly swing bottom in this market because of this F date indication that we have here. So we're likely going to start seeing crude oil bottoming in this time period, this week, last week, no later than next week. So it's this time period right now, and start moving higher. So when we have the weekly now indicating that we are ready for a turn based on the F date here, and then you go to the daily and you see we have the dollar sign F date, the potential for a higher daily swing bottom in comparison to last week's low. The potential is very high that as we cross the high of this price bar right here, if we break the high, which is 48.28 in the crude oil, the current month of crude oil, then we are going to start looking for this market to start moving higher for the intermediate term. So right now we have what's called a buy setup, and basically we break the high of today and prices start moving higher. We can latch onto that and go for some good intermediate moves to the upside overall, and that should last a few weeks at the very least. But this downward trend appears to be at its end at this time, and it's indicated here. And here we can see the previous bottom made November 14th, 2016, which is this support level right here. So we're in that area right now. So now is a good time if you're a crude oil trader to start looking for the prices to start moving higher now in crude oil. And that's the forecast based on F dates for today. Thank you for watching, and I'll see you in the next video.